Hello and welcome everyone to another episode of Paklaunch. Paklaunch has done a fantastic job in bridging between VC, PE, large institutional investors, between emerging markets, developed markets, bringing knowledge, information, expertise from across the world. So thank you, Ali. Thank you, Paklaunch, for the wonderful job that you're doing. Today we have someone with us who can, in fact, give us a talk much longer than 1 hour. She can give us a lot of about career advice. I'm sure a lot of young people want to be in investment banking, want to be as successful as she is. Also in investment management, she's reached to the top, one of the largest institutional investors and asset managers in the world. And also personally, she is a well-rounded person, having run marathons and climbed mountains. So we have something in common because I have run a marathon, the New York Marathon, and it's the most fantastic marathon, fantastic experience I've had. And I love the energy and spirit of New Yorkers. And I've also climbed some of the mountains in Africa, not as cold as Mount Rainier. I think the one that you've climbed, Amy. So we have that. Plus, I was also at Goldman Sachs. So your competitor. We have been on the other side of the table quite a few times, including once for the purchase of Debenhams PLC, which we acquired, TPG acquired a few years back. So very, very warm welcome to Paklaunch, and happy to have you here.
Thank you very much. And thanks for inviting me to join you today. I really appreciate it and care a lot about this space. So always happy to share thoughts whenever I can.
So fantastic. And I think for me personally also, I lived in the West, I worked there, and then I've gone back to emerging markets. Sometimes, emerging markets are very rough and tumbling. And so you feel that I should be back in the West. But I think people like yourself who have faith in emerging markets, invest in emerging markets, that give us a lot of confidence. So tell us a little bit about your experience. I mean, you've been in Morgan Stanley for a long time, but you did something called ARC Worldwide before you joined Morgan Stanley. Then you took a career break and you did applied psychology. So you've had a bit of a very varied career. So tell us a little bit about your own journey, and then we'll go into your investment philosophy and thesis.
Sure. Happy to do it. I think when I tell a little bit more detail about the story, all the pieces will make a little more sense in terms of how they fit together. So when I was in university, the one thing that I was focused on was spending my time in business. I ended up focusing on accounting. There was no real strategy to it other than accounting majors were the ones that typically had jobs after graduation. And that sounded very good to me. So there was intention there to make sure that I had a job after I graduated. There was a very clear message from my parents that was the number one, first and foremost goal of going to university was to have a job. So I started in accounting, and the one thing that came out of that, there's always, these twists and turns that come in your career and your journey, is when I went to study abroad, because I was very curious and I was very focused on the global markets. When I went to study abroad, they would not let me study abroad and continue to get my accounting credits, because if I study accounting in a foreign market, it doesn't count towards your degree in the US. And so for that reason, I wouldn't have been able to graduate in 4 years. And under my parents' wishes, there was no chance of not graduating in 4 years. There was only one option, which was we're giving you 4 years to finish college, and you better finish within that period of time. So there was an alternative that showed up through my university, which is I could do a study abroad program in San Francisco. And this was back in 1999. I landed in San Francisco, not really having any idea what was happening in Silicon Valley, what was happening in San Francisco at the time during the first tech bubble. Because of course, we used computers back in university, but we had to go to a computer lab. It was part of our day-to-day, but again, it was still very early stages. Even if I had taken computer science as part of my business course, it was pretty basic in terms of what we were learning. But when I landed in San Francisco, this was an entirely new world of technology that was basically at my fingertips. And no kidding, I had a job at an internet consulting firm the second day that I was on the ground there. I worked for a firm, so ARC Worldwide. It used to be called NovoCorp. It changed names a few times. But what we were doing is we were rolling out the first web presence for Fortune 500 companies. So back then, very bit different than what we have today, when we can just build our own website in a matter of minutes for a company that you establish in your home. Back then, you really needed to do all of the hard coding. You typically hired a consultant to build your website, understand what the marketing initiatives were, and so forth. It was so different than accounting. At that point, I threw out accounting as my major, said I was going to dedicate my life to tech, and had totally pivoted in terms of a career change in the middle of university. At that point, I was working almost a full-time job and finishing up my classes. I was lucky to actually not drop out, because you've heard many stories from people in that environment where it was very easy to just stay with the momentum that was happening on the ground and in the workplace, and to pause your academic efforts at that point of time. I think I felt too much guilt from my parents, so I somehow figured out how to do it both. I actually even transferred back to New York, continued to work for the same firm, and finished my degree at night and on Saturday, so I could try to balance both. But during that time, the one thing that I experienced firsthand was a very difficult market environment that played out while I was in the industry. We had filed our S1. Our company had planned to go public. At one point of time, we had a town hall, and our CEO had told us that we are going to pull our S1. We're no longer going public. The environment doesn't feel strong enough to continue into the public markets at that time. And I knew enough from my business background that that is not a good sign if we're doing that. We went through 2 rounds of layoffs. I experienced that happening within our technology company, and it was a rough time. And that was when I really considered doing something else. So I thought to myself, maybe I should try this business thing one more time before I dedicate my life to tech. And that landed me at Morgan Stanley, landed me in emerging markets. At that point of time, I actually had no real understanding of all of the activity and the environment that was happening in EM. EM was a really rough spot back then too. So in the late 90s, you had a number of crises. You had Asian financial crisis, Mexican tequila crisis. There was many of those that had hit the markets, and it was really a rough environment. But I didn't know what I was getting myself into. I was trying to save myself from one crisis that was playing out, and just position myself in an opportunity that landed in my lap. And one of my first jobs that I had in the emerging market world was tracking down lost Venezuela oil warrants. They were not on a computer. A lot of it was a lot of that was still like paper documentation. We dealt with receivables in India, where they were still paper stock certificates that were not delivered by bicycle messenger in India. And this to me was just this fascinating world of finance. And I thought to myself back then, this is nothing like we learned in business school. We were learning about PepsiCo or the latest tech company. And this world of emerging markets just had a whole nother level of uniqueness and cultural locality that you had to understand in order to operate. And that was one thing that really got me excited about EM very early on.
So in a way, it kind of lives through the test of Steve Jobs that, your life makes sense looking backwards, but at that time when it's unfolding, it's quite hairy and it's quite scary. So I can imagine that. But, you're very lucky because late 1990s, there was a lady called Mary Meeker. I think she was at also Morgan Stanley.
She was
a top tech analyst, and Jack Grabman. So these were the people, the analysts who moved the stock market. They were the rainmakers. Before then there was the private equity guys, the KKRs of the world, but then late 1990s, it was the tech analysts. So you saw that action at some point, both the upside of it, but also the downward trend of it. How has that experience prepared you for investing in emerging markets, and also in terms of resilience of building businesses? The business that you were part of, and I know another one, tech consulting, Razorfish, And I knew someone who
Yes,
worked at
know them
Razorfish.
very well.
At one point in time, they had the stock option worth $300,000, and they were like, "Hey, we are rich." And then like 6 months later, it was zero. So there is a lot of similarity between the high innovation of tech and and investing in emerging markets. What were you learning from your initial years, at least looking at tech, being part of that, and then later on being part of Morgan Stanley on the investment management side?
Absolutely. I think there's a lot of similarities there, and I think I can look back at it now through my career of close to 25 years and see the resilience that EM really allows you to learn and to experience. And I think one of the things that, even as we're talking about founders, that resiliency and the ability to really move through these markets and not be affected and take an opportunity, specifically if there's a crisis, as an opportunity to enter in certain markets. So I think that that's the one thing that you see. Some people make it through the EM space and survive for a very long time, and other people end up burning out. It's just a piece that, together with the applied psychology background, that was one of the things for me that I got very interested in the mid-career when we started seeing, I would argue, the introduction of 24/7 information, which we didn't have early on in the emerging markets. So we would go home, be able to take a break, have dinner with our family, the data would stop. You didn't have that always on access to data. But when that started happening in the emerging world, and you could read Twitter all night long, you got emails all night long, you could constantly get updates on your portfolio, it really created an environment of like overwhelming stress where your ability to self-govern had to be very, very strong, because otherwise the market would just take every piece of energy, every moment of energy out of you. And we saw many of our friends and many of our colleagues not continue through because they would even leave the industry and decide to do something entirely different because it was just so much stress and so much of trying to manage this like 24/7 lifestyle. I spend a fair bit of time in the digital assets community and the crypto community today, and many people always say that, you know, crypto is 24/7, it trades around the clock. This is something that's very new to traditional finance. And I always stop and say, well, you haven't worked in the emerging markets. In the emerging markets, we do work almost 24/7, or we used to say our trading desk was basically 24 hours a day, close to 6 days a week, because in certain parts of the Middle East, we would trade on Sundays. So this is something that we were, I would say, the first to try to live through this environment. And it's a very unique experience. And it's a lifestyle that even to this day, with all my analysts on my team, we really try to help them prepare for this long-term career decision that they've made and how you navigate through that. So 25 years into it, you're still having fun, you're still sleeping, and you're still healthy. Because, you know, as many of the people on this call know, when these are long haul flights you're taking. I was in Riyadh, Saudi Arabia last week. I'm heading down to Brazil on Thursday. We were in Asia 2 months ago. You're really putting a fair bit of wear and tear on your body. You're asking your body and your mind to do a lot. And that's something that you really have to prepare for, that I would say nothing in school is going to prepare you for that sort of environment.
And of course, everything in emerging markets is a bit more dramatic, a bit more emotional. So of course, more draining. And so you got to be prepared for that. But good on you that you've maintained that discipline and those practices to keep you grounded and to be there as a long-term player. I would say, I would share with all the audience that you would have done very well if Amy invests in your venture as someone who's very accomplished, but you would do even better if she invests in you as an institutional investor. If your business has exited on your stock market and then Morgan Stanley comes in at that stage to invest in your business, then that means you have you've really hit the big bucks. So someone, Amy, I'm going to ask you questions, and I'm going to assume that you're going to jump between VC, PE, and institutional market
Sure.
space, because I think that's what we'd like to discuss. So you've got a lot of experience in investing in emerging markets. And I would imagine as a large institutional investor, you only invest in some of the large liquid stocks. But tell us about the journey of some of the local stock exchanges where uh, early stage ventures have gotten exit, have grown, and there is enough liquidity, there is enough transparency for someone like Morgan Stanley to come and invest. And you could probably give example from Mumbai or from Latin America. What has happened in those markets? What has been the journey of such markets that ventures grow to that level where they get an institutional investor like Morgan Stanley?
It's been very interesting to see what's happened over the last 20, 30 years, and maybe to give folks that are listening today a little bit of history on our team. We were one of the earliest to help foreign investors move and invest in some of these emerging markets. And in the early days, we were looking and setting up vehicles that would help them access markets that were not available to foreign investors. So we did, in the earliest days, have a closed-end fund that helped investors to get access to Pakistan. So we had a Pakistan closed-end fund, we had an Africa closed-end fund, and we had a Turkish closed-end fund. You name it. That was the way that we would set up structures to help foreign investors do something that they could not do on their own. And that was one of the values that we brought to the table. We had the local exposure. We also had the local knowledge. And to this day, it's a piece of our DNA that we continue to carry on. We do spend a lot of time on the ground understanding not only just what's happening in the financials of these companies, but what's happening locally in many of these companies. And I think the world has changed a lot. I mean, when I was in undergrad, my senior thesis, I wrote on ETFs. I was a little bit ahead of my time then. My business professor thought it was an awful idea. He said it would never take off. And at the time, I think there was only about 9 or 10 ETFs in the market. And it took about a decade. So really, global financial crisis is when you saw that J curve really take off for passive investing in ETFs to really hit the market. But that's the sort of thing that's really changed our environment. Many people are using passive investment now to just focus on lower fee exposure, but it also has taken a lot of the liquidity out of some of these smaller markets. I think one of the other things, and maybe I'll bring in a little bit on that VC side too, when I spend time on the ground and I'm talking to founders about building their company, of course, I love the local markets. I want the local markets to continue to evolve and grow. You look at them in some cases, it's like these are markets that we care a lot about. They're like your children. You want to see them grow and thrive and mature over time. And the one thing that's been a bit shocking for me is when I run into founders and say, I aspire to have my company listed on the NASDAQ. And I go, no, 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 no. And I know why. But I think the thing that I hope at some point we can find a better path forward is how do we help these local markets grow? Some of this is bottom up and top down, right? We need the governments and the regulators in local markets to also be supportive of those listings and to help, but we want to make sure that those investors do stay local and that we can grow these companies, because I think it's one benefit of the founders in the emerging market space have is they know those local markets better than anyone else. We've seen this again and again with companies, even large companies like Uber or Facebook, or you name any other platform that's been out there that's on a global scale. And you'll see in many markets, there's a local solution that dominates or has basically been able to overtake the local competition and not let some of these globals in, because they really know how to better navigate that local marketplace. And that's one thing I get excited about in terms of the local EM founders, especially on the VC side. You're on mute, sorry.
So there's something to reckon with, that you have to be, before you go and conquer the world, you have to be the 800-pound gorilla of your local market. You have to dominate it. You have to be, it's your hinterland, and you got to be very good there. And that is the place where you fall back on. So tell us a little bit about, for instance, India. India has had a very interesting ride, because in the early 2000s, you also invest through India and in India, most of the institutional investors and private equity investors had a bad experience with India. Most people lost money. They got taken for a ride by the founders. And India was a no-go area for most institutional investors from 2007 onwards for a long time. And then come back 2014, India has really risen up to the extent that I was reading somewhere that, $30 billion gets invested in India and only $300 million gets invested in all the markets around it. Emerging Asia, other than the bigger economies. So how has India managed to recover? How has India managed to come back from that setback? Because all markets have that setback. We, in fact, have had that setback recently. But how do you recover from that? And how do you build a narrative and a big investment case from your experience of India or Brazil, anyone that you like to choose?
Oh, I mean, this is such a great question. And it's really tough, and it takes time too, right? It doesn't happen overnight. It's one of the things a colleague and I of mine, we were just talking about that earlier today, which is even for EM investors that live and breathe these markets every day, we can have our own biases because of the history we have and because of the experiences we have. And in some cases, they can be bad experiences. They can be on the level of like PTSD level experiences if things have went wrong and you've been holding risk in certain markets when either capital controls were put on the market and you can't get your capital out, or a company goes to zero, or worse. And you're dealing with regulators, you're dealing with clients, you're dealing with like your own personal turmoil about how possibly did I not get out of this position. And this is in the liquid markets, right? If you bring in the discussion around private, and I think that's one thing that we've seen even in the private space, many of the private investors we knew very early on in the early 2000s, they don't even exist anymore in the emerging markets. They're out of business. And we're starting to see there's a new class of private investors and venture investors that have emerged in the emerging markets, but it's a relatively new and fresh set of teams that are doing this. And one of the things that they're free of is this historic bias that you live with and you constantly have to manage. And that, this brings in this factor of psychology or self-governing. Again, you have to understand, how do you enter a market that you may have been burned or had a bad experience? As you had mentioned, India's been tough. They weren't very accommodating for foreign investors. It would take you forever to even get ID numbers to trade. They had lots of different documentation. There was fear that all of your assets would be taxed, even if they weren't in India. There were all of these things that you manage, but the market continues to grow. Many times it also depends on where other opportunities are in the marketplace. So obviously, China has gotten more difficult these days. So when large markets like China get more difficult, all of a sudden clients start or investors start being more curious about what else is out there. Is it India? Is it Pakistan? Is it the Middle East? Other parts of Southeast Asia? Is Africa back on the map again? I think we always, we talk about Time Magazine covers. You have Time Magazine, who's had Africa being like the continent of the decade, and then also another cover that has been the total opposite, right? So you've seen some of these markets just see the best of times and the worst of times, even within our short period or short career within the environment. So I think that's one of the unique aspects of navigating emerging markets, is really being able to make sure that you're minimizing your bias, making sure that every point of time, you're waking up and starting as a new day and understanding what is the opportunity today in this market. You can use your history and your understanding from the past to help inform your work, but you have to make sure that you are also spending time understanding what has changed within that marketplace. And maybe I'll use, Saudi Arabia as an example also, because it's a big Middle East is a big growth area. We talked about, I think, even preparing for this, that many founders will tend to move to Saudi because there's some incentives there, and they're very keen to continue to expand their marketplace. I have investors on my team that have a lot of experience with Saudi Arabia. When Saudi was closed to foreign investors, when it was very early on and we were buying P-notes to access Saudi Arabia, when they had poor experiences early on traveling to Saudi Arabia. Now that's not the Saudi that we have today. That's not the Riyadh that I was in, 72 hours ago, 4 days ago. It's changed quite dramatically. We have women in the workplace at higher rates than we see in some developed markets. We have an entire economy that's changing, that's focused on entertainment and tourism and movie theaters. I mean, that's something that we just didn't even have experience with in the past. So that's one thing that we try to make sure, and we have to look across our team. We even call each other out on it. Yes, I know that that's the case, but it's changed, and let me challenge you on some of the viewpoints you may have. We could walk around the map, and there's probably these challenge points that we could cover on China, Pakistan, India, Saudi Arabia, Africa, and even Argentina. As I was listening to something the other day, and there's a saying that said, Argentina never misses an opportunity to miss an opportunity. So, that's a market, but will that always be the case? Or now that we have Malay in office there, are things really changing? We have to make sure that we don't take too much of our historic bias and that we're looking at that with a fresh set of eyes based on where we are today.
I'm a big fan of Malik. I can talk about his policies and applicability across the world for hours, but that's for another topic. But absolutely fantastic. And I think what you've said is that you should not have your bias about emerging markets. They can turn around, but they can also, you should also be mindful. For instance, case of Saudi Arabia, it has changed a lot. And on the surface level, processes have changed. But I've invested in a venture with a woman founder. She set up the business. Everything's going well. Until the last stage of the process of registering the company, they asked for her husband or her brother's consent. So you can see that the processes and things, and this happens everywhere in India and other places. Somewhere there is some kind of a hook that kind of holds you back. And this is where, those systems are new and they're still being tested, but they're evolving and they're growing. So one must be mindful of that of course things will take more time, but it's definitely worth investing. So tell me, if you were a founder and you were investing or pitching to an investor, what is the case for investing in emerging markets? Because a lot of time people say, if I invest in Google, 10 years, 10x. Microsoft, 10 years, 10x. No liquidity risk, very low risk, and I can get that return. Why should I take the liquidity risk, the other political risk for 10x returns in 10 years? How would you pitch emerging markets for if you're a founder looking to raise money?
These emerging markets, so many of them have populations that are well educated, that know the local markets better than any foreigners, better than Google or any of the other global companies, and they can really solve for opportunities on the ground that many of these global organizations can't solve for. I can see that even within my own organization. We're very large. We have 80,000 employees around the world, and there's certain types of business that many times we just can't get involved in because we have so many other larger businesses that we're trying to manage. It doesn't mean that there's not other parts of the market that aren't very profitable and that there's a solution that needs to be delivered to that local marketplace. It's just not our place to be able to participate in that. And I think that's really where the founders can take shape and bring in that local market opportunity. And you can even disrupt some of the big, look at Nubank. I think Nubank is an incredible example in Brazil. Everyone said that the banks in Brazil, they dominated the entire marketplace. No one will ever disrupt them. They have a stronghold on the market. And here you have founders that step in and they just offer something that hadn't been offered in the marketplace before and continue to grow. And I think that opportunity we see again and again in emerging markets. In India, as an example, I was there last summer, spending some time with some of the founders on the ground there. And as you see this per capita GDP continue to rise, we were talking about just the opportunities in the marketplace. Many friends that grew up there would tell stories of not having refrigeration and then having a small refrigerator in their home, maybe having a freezer that only had enough room to have like just 2 ice trays in it for some drinks. And now the entire market has evolved. So, okay, now you have a full-size refrigerator in your home. Now there's an opportunity for startups to start different consumer goods, ice cream companies, frozen food companies that they never had the ability to really sell before. Same thing with freezer technology for the small businesses in many of these cities across India. It just wasn't something, if it was because the electricity infrastructure wasn't there or the refrigeration technology because of the low per capita GDP wasn't there. This is all changing, and the opportunity for many of these local founders to come in and really capitalize on this is there. It's very exciting. And they really have been able, I think the thing is they know the tastes, they know the cultural dynamics better than any global market. We've seen this even with the Pizza Huts and KFCs of the world as they've moved into some of these markets. Certain markets they're successful in, and others they just absolutely fail. And the local brands really dominate because they just know their consumer base better. So that's something that I continue to get very excited in. We're always interested to see who's executing well. And I will say the one thing, and maybe a topic to talk about, is how do we make sure the founders have the support and the resources they need? Because I think that's one thing I've talked about with many of my friends and colleagues. In the developed world, there has been some of these incubators that have helped founders from a very early stage make sure they're set up correctly. If that's with your banking, your cap table, any other of the basic elements that you need to set up from very early on to make you more attractive to raise capital going forward. That's something that I think we can continue to grow within the emerging market space. I think we've seen it again and again within many of the emerging markets that it tends to be more of a friends and family dynamic. Maybe you set up a board, some of your family members are on it, but it doesn't make it always that attractive to like jump into the more formal fundraising cycle of going through a Series A or building that company out going forward. So I think that's where we can really try to, I think we see a little bit of that happening. COVID has changed things quite dramatically. Everyone always had to go to Silicon Valley, or maybe it was London or wherever. You had to go to that center of that VC fundraising that was happening. But COVID and Zoom meetings and remote presentations really exploded during that. And I think for something that I've just never seen in the same way that I have in the last 5 years, when I see some of these venture companies from California, I run into them in the Middle East, they're sitting in India, they're sitting in other parts of Asia. That's something that is definitely continues to be attractive, and I see their ability to bring out some of this talent. So I think talent's everywhere. The opportunities for founders is more global in nature than ever before. And now how do we help just give them the right resources so they can go through that process as a founder? Because it's tough. It's extremely, even for the best founders, even for, second, third time founders of companies, this is a very tough slog. This is not an easy thing to do. And for some of the businesses that we really need established in many of these markets, I think this is a personal view. I hate to see founders just flip companies. I think in the time of easy money, we got into a period where people wanted to just launch a company to have it acquired or to sell it to someone and get an easy exit. I think that was one of the things we wanted to talk about today was exits. But in many of these markets, we need committed founders to build the infrastructure for the countries. You need, someone like a Brian Armstrong, even at Coinbase, where he's like dedicated his life to changing the way people think of banking or access or remittances globally. But this is not an easy slog. This is a decade-long or more multi-decade slog to really build this. But I think we need more founders that are really committed to seeing this through going forward, and also how they grow as founders too. Because I think that's one other thing that I've seen is you can be very, very good at one thing and be a phenomenal founder, but running your own business, there's blind spots that you never knew you had until you step into that founder role. And that's where it's so important to have that good advisory group around you, because when you have that good advisory group, when you have those strong relationships where you can call them and say, I just don't know anything about, managing this cap table, or I'm having an issue with the regulators and I just don't see a way forward. That's probably one of the biggest pieces for founders to put together, is that network, that advisory group around you to help fill in some of the areas where you may not be as strong. And that's okay. You can't be strong at everything. Your job is just to pull in the right talent for what needs to be done and continue to move the company forward.
I think what you've said completely aligns with my experience. Number one, timelines, 3 to 5 year VC or PE fund timelines don't align with emerging markets timelines. It takes 10 years to build businesses. If you invest on a 5 year basis, your returns are going to be very little and it's going to be very volatile. But if you invest on a 10 year basis, you're mostly going to make money. You're going to make good money. IFC, International Finance Corporation, has one of the better returns in the world globally in Pakistan because the investment horizon is 7 to 10 years. They have got soft capital, but they are able to sit it out, wait till the cycle turns positively, and it will always turn positive, but you need a longer timeline. So it aligns with your thesis that you need builders, not flippers, in emerging markets, because a lot of the infrastructure has to be built alongside with the business that you're doing. So number one, I think that the other thing, I also raised a Pakistan-focused private equity fund, and I realized one thing, that the biggest gap in the market is the founder, is the entrepreneur. You can find a business opportunity. It's lots here. You throw anything, it grows. You find the business model to capture that opportunity. The right founder with the right value system and the skill set is the rare thing still in emerging markets. And I think that's where magic happens when you find them. They're very rare, but it's difficult to find it. But that is where the focus has to be, that who's the founder? Does he have the right value system and the skill set? Would you agree with that?
Oh, I definitely agree with that. And I think it's something that we see in a number of markets. I think it's changing a little bit as you see some of these grassroots pockets forming in some of the emerging markets, angel funds or like groups that come together and help to teach and share interests in terms of founder development. But I think this is where there is a cultural element that we have to understand and try to find a way forward too, because you're right, there's some markets, and I spent time in Japan earlier this year, back in May, and I was sitting with a group of activist investors there, because the activists have been very very focused on the Japanese market as we're looking for governance changes there. And someone around the table raised their hand and said, why don't we have, they were all foreign activists. And they said, why don't we have any local Japanese that are taking advantage in doing this? They're the ones who know the market better than anyone else. They can step in there. And and the thing is, there's a social element that's hard. You know, you're talking about having someone in Japan taking a position as an activist investor against companies to change social constructs that have been in place for a very, very long time. And there was an academic professor that was sitting there with us, and he said, if you think about the classes that I teach, many of the students aspire to work for a big company and be within a large organization, right? Not be a founder sitting out there as a target on their own, you know, fighting the fight against, you know, the broad mass of people or the corporation or the regulators or the government. I mean, that's a very uncomfortable place to sit in many of these markets. So I think that's where that does come down to how do we create these there. And again, there's ways to go through it. Maybe it's starting the ice cream company and not like trying to disrupt the banking sector. But you know,
I think what you've mentioned is so true. Maybe there needs a major reformation in the banking and the capital markets, and maybe you need the equivalent of an Admiral Perry and his landing of the port and on the Tokyo harbor to force people to do that. And there is a role for that activism. It's never going to happen inside because there's too much clubbiness. There's too much like old culture. And I at least for me, I appreciate somebody else comes in and does the heavy lift to get that activism, to get the governance in place, so the market kind of opens up. But I think one thing which would and I think a lot of American investors do that, and that's where I think there is a value for institutional investors to show a higher level of governance, show a higher level of operational excellence that there isn't in the market, and people don't have ambition for that. But my question before coming to Abhi is, US is, of course, the biggest institutional investor market. US catches its cold sneeze in the world. The rest of the economy catches a cold. So what do you predict is going to happen in the next 3 to 4 years in terms of interest rate, in terms of capital? Is capital going to come back into the US as Donald Trump wants? Less taxation. And so that basically means is less capital for VC or less capital for institutional or for public markets in emerging markets. If you can just give us your view for the next 4 to 5 years.
Yeah, I think there's a more balanced future at some point going forward. I think the momentum right now post-election has been extremely strong. I know some of you recalled that, you know, saying, is the US a bubble? It's so concentrated. If you look at the ACWI index, I think it's 75% US now. I've talked to different wealth platforms that are overweight US, so they're almost 80% US. Oh, it's so uncomfortable to me. I'm all for having and seeing the opportunity in the US, but the world is such a large place. There's so many opportunities elsewhere, and I've had conversations with different clients and friends where they'll tell stories about even thinking about just focusing 100% of investment in the US. That is so risky. I can't actually like that. You talked about like that the stability of investing in Google, and there's something that's comforting about that. I don't know if I've just spent too much time in emerging markets, but putting 100% of my capital in the US, I can't imagine that. It's just unimaginable to me that we're in a position where people are having that discussion, given if you spend time in Southeast Asia or the Middle East or elsewhere in the world, there's so many interesting things going on. There's so many opportunities that we can still capture. And I do think, look, some of that will, I think there will be some opportunity here. I think some of this noise and momentum will slow down a little bit. And we will have some reversion to the mean, to say the least. But right now, there's a lot of excitement. I think yesterday I was watching one of the news channels, and they had SoftBank, who was at Mar-a-Lago, committing $100 billion to the U.S. market. So lots of headlines.
Hopefully not in WeWork.
Exactly.
Hopefully not investing in WeWork.
Exactly. So I think, look, there's a lot of excitement here. I think that's one of the things that Trump is very good at doing is really capturing, headlines and creating this momentum. I think we saw it even in the elections. Look, he went on Joe Rogan or even, I don't know if anyone watched Mark Andreessen on Joe Rogan the other day. So I spend a lot of, as I said, I spend a lot of time in the digital asset space, and anyone who's in technology or spends time in the digital asset space knows how many companies have been debanked in the US. It's a very real thing that friends have lived through, that we've helped them try to navigate. And Mark Andreessen goes on Rogan, and all of a sudden, for the next 5 days after that podcast, everyone's talking about, oh my gosh, there's a debanking issue in the US. We all knew this, right? But the amplification of things like a podcast like Rogan or other outlets for news can really just capture the attention of the media and take some of these narratives viral in a way that we've never seen before. It will normalize, but some of this, we feel it with our stocks too. So this is for fundamental investors. It's something that we all have to deal with. How do we navigate an environment where there may be a meme stock type impact to investments that we have that really don't have anything to do with the fundamentals of the company? That's the reality of the world we're living in today.
I'm more of a Lex Fridman podcast fan, but I did see that and how Elon picked it up on it, and then it just went viral, the debanking issue. Coming back to Pakistan, I've got a question related to things that you know very well about, which is Abhi. How did you join Abhi, and how's your experience so far? And what is the most important role as a board member for a relatively early startup that you think a board member should perform?
Oh, great question.
And the audience should keep the questions coming, and we're going to tackle them one by one.
So Abhi was founded by one of my longtime colleagues and friends, Omer Ansari. So he worked with me here at Morgan Stanley for many years. He ran our small cap fund here. And I would say the two of us were always very keen at looking at where we can continue to expand in terms of the emerging market world, what the opportunities were in the marketplace, and how do we think about things differently. So he's somebody that I always felt like had the right mind to really navigate this space going forward, and he has endless energy. So when he went to Y Combinator and pitched Abhi, he was a graduate of the Y Combinator 21 class and invited me to be on the board. That was a no-brainer. He's definitely one of those founders that has what it takes to really carry this through and get it done. And in terms of being a good board member, I would say that, look, we have VCs on the board with us. I'm an independent director, so I kind of try to take a little bit of a more balanced approach on understanding the environment of the emerging world. But we're in multiple different jurisdictions now. So we have exposure in Pakistan and Bangladesh and in different areas of the Middle East. And that's something that is actually very unique for such an early stage company to be in so many markets. So I think one of the things that we can do there, and I alluded to this earlier on, board members are there to help that founder, help the team really navigate going forward, where they may not have experience if it's regulatory, if it's in legal contracting for different things, if it's for HR hiring. Those are all elements that a founder can be incredible at what they're doing, but they just might not have a lot of experience with that going forward. And I think that the board is there to really help navigate that and bring that extra set of hands to continue to move the company forward. But it's been an incredible experience. I love it. I'm always very keen to see how quickly things are moving, how much opportunity is there. And then, where we're navigating as a small business and a startup, what we could do better, or where there's any advice that I could offer for other companies going forward. So the one thing that I will say, it's tough. If I know many people on the phone are already doing this, I give you so much credit for even taking this on to be a founder. It is so hard. It's like basically you signed up to climb Everest, and what you didn't know is you needed to sail around the world before you started your climb to Everest. And that's kind of like what it's like when you're in this founder mode, and you never knew anything about sailing, and guess what? You basically focused on mountain climbing, and now you need to figure out sailing before you even climb that mountain. That's kind of what it's like when you're going through this environment. There's things that will be thrown at you that you have no experience doing, and you need to figure out on the fly. And I give you a lot of credit for doing that. It takes a very unique person. And you alluded to this earlier, finding that founder talent is one of the hardest jobs that we have as investors, is finding that right personality to make sure that they can carry through this challenge at hand.
And finding the right board member. And I think Abhi and Umair has hit the jackpot in having a personal passion for emerging markets, but also having a global outlook and the connectivity and the relationship. So I feel very jealous of Abhi that they have you. But in sense, another question that we have is, how important, in your opinion, is the role of regulator in terms of understanding and facilitating global trends to build a strong local startup ecosystem? So how, if the regulator is globally minded and knows what the global trends are, and then try to facilitate the local ecosystem, how important is the role of the regulator?
Oh,
That's from Habib Paratya.
I need to choose my words very carefully here, because the regulatory environment has been a challenging one, especially for someone who spends part of their time in the digital asset and crypto space, because I think we've been hit more than anywhere else. And, part of that startup, but part of that is, the dynamic that you're dealing with the banks. The regulators do play an important role in this. They need to create and foster an environment that's healthy for startups. I think some places do that better than others. And even to your point on Saudi Arabia, sometimes they put all of the pieces in place, but then they forgot about this one piece where they're still asking a husband or a father for a signature, right? It's not always perfect. But as long as you have a regulator that's open to listening, I think and learning, that's one of the most critical things that we can have. Even in the digital asset space, one of the things that it's been very challenging in the US specifically, is they will not allow a regulatory sandbox here. UAE has been incredibly successful in delivering this, just providing a sandbox where founders can try different solutions within a safe environment, so they don't have a situation where they're being dragged into court. Startups don't have a lot of money to spend on crazy legal fees. And I think that's one of the things that I wish the regulators would understand more, is like, find a balanced approach to put regulation and construct for startups that is healthy, but don't create a situation where a startup has to spend so much of their capital, which, look, every dollar has to be accounted for, and especially in the emerging markets, because it's hard to find capital that's committed to invest in the private side of emerging markets. You're really locked up in these investments. And they don't have the ability to spend so much of that capital on just the legal burden of navigating some of these issues. So it is important, and finding a good regulatory environment that you can work with and foster is worth considering as you think about moving into an additional market that you may not already be in. Sorry, you're on mute.
So, second last question, because we're slightly over time, but we've had quite a few questions come through our way. How do you see AI and machine learning transform the financial services sector in emerging markets? What innovative use cases are catching your attention?
So AI and machine learning have been around for quite a while. I think it's this generative AI that has really captured the attention. I think there's an element of you can't really have a startup these days unless you have the words AI somewhere in your presentation in order to get funded. I hate that
Or,
part of it.
or climate change or something like that.
I hate that part of it. I hate that you need to use those buzzwords in order to capture people's attention. AI has value. There's no question about it. It is going to be a long road ahead. I think some of the basic things that we're seeing roll out now are more on the productivity side. So obviously there's an impact there. But it's going to evolve over time. I think it's hard for us to even know where it ends up. And I think the other thing that we spend a fair bit of time talking about is what will people pay for? Because if part of AI, and even my analysts that love Perplexity and ChatGPT and everything else, do they look at it like the next Google? It's just an upgraded version of Google, and they expect it to be a more adaptive search to a certain extent. Will anyone pay for that? Or do people just assume that's going to be free because search has always been free? Or are people willing to pay that premium subscription for ChatGPT? There was a joke within some parents that I know that one of the top Christmas gifts of 2024 for teens is a ChatGPT premium subscription, which tells you like sign of the times in terms of what kids want, help doing their homework in a more efficient way, and whatever else they're using it for. So I think there's some productivity elements that will come out of it. I think there's even more if it's on the healthcare side. We've seen some really interesting data points on just being able to test drugs, production of certain things that can get more efficient. There's definitely a major efficiency gain there, but this is going to take major time to roll out many of these. And even as we've done pilots in-house with some of the new AI tools, you realize very quickly, okay, there's opportunity here, but we're not ready to go live with this. There's more work to be done, and that will continue to evolve. I think the one thing that I would say that I'm curious about, and I have someone on my team that I hired that actually came from an investment firm where their mission was to use AI and machine learning to replicate what fundamental investors do. And that's a new angle of AI, right? So that's where not only are we using AI to be more productive, maybe fill things out, do translations faster, summarize things for us. Those are the easy things and where I think most people have been spending their time. I think the next step of this is how does AI potentially help us make faster, more efficient decisions? Can we get to the market faster? Does it help us look at more technical aspects of portfolio construction in a way that we may have not been able to do that before? And that's very exciting to me. I think, that's really traveling down the like phase 2 of AI and maybe this topic of agentic AI.
So last question, Morgan Stanley focuses on emerging markets. Have you a recruited team from Pakistan other than Umair? And what skills, qualifications do you look for in investment analysts in your team?
So we have people from all over the world. I think we have one of the most diverse teams at Morgan Stanley. We have offices in Mumbai, Singapore, Hong Kong, mainland China, Riyadh, Saudi Arabia, New York. We don't always have offices everywhere on the ground because, as many of the founders on the team can relate to, that is many times fixed costs, more office space, more infrastructure, more regulatory environment, another bank account that we need to account for. So we run our business the same way you would think about the expansion of your business. So we tend to have a bit more of a hub mentality and spend a lot of time on the ground there. I'm open to recruiting people from anywhere in the world, always makes us more diverse and gives us more insight into many of these markets. I will say the one thing that's changed just in terms of background. And I think this is a message even to business schools, because I would say business schools are failing us a little bit. The students are doing a better job figuring this out on their own. Any of our talent that we're hiring, they may have a background in economics or business, but most of them now have a background also in computer science or coding or else otherwise. So that's a very critical part of building the future of asset management. Is you need to know the technology and the business and the financial understanding all in one. It goes hand in hand these days. And I truly believe that will continue to go forward to stay relevant in many of these investing roles.
Thank you very much, Amy, for your time and your attention. You've been traveling a lot, and now you're back in New York on a not a very sunny day. You took some time out. Any last parting words of advice to founders, investors looking to invest or build in emerging markets?
Keep building. It's just such an incredible thing what you're doing. Focus on your local market. Help us build that local market and the listings there. We want more companies to invest in on the ground. And if you ever need any help, please feel free to reach out. We're happy to try to extend our network where we can in order to provide help and get things moving. Everyone on our team is committed to the emerging markets and very passionate about that. It's the only way you can work in this space is to really live this day in and day out. So good luck with everything going forward. And I really appreciate the time speaking to everyone today.
Thank you very much, and lots of valuable lessons from Amy's experience, extensive experience, both in the US as well as in emerging markets. Number one, emerging markets is for resilient people, people who are builders and not flippers. Number one. Number two, you have to play the long game. You have to be building for 10 years. And indeed, it's like building the railroads. The railroads of the West were built in 100 years ago. Some of the markets, they haven't done that. So that basically means a lot more hard work is required, but a lot more wealth and returns are still to be found in these emerging markets. But for that, you need to have a resilient mindset and a long-term mindset. AI, of course, and machine learning is going to be an important factor, but so is going to be local knowledge, local operating capability, try to build global excellence in local ecosystems and build great local teams. I remember in Goldman Sachs, we had an area in London on the trading floor, we had about 200 people. That was about by 2008, 2009. And by another 10 years later, a lot of it was replaced by technology. It's only 2 people were there. So you have to be abreast of these trends. 2 people who are managing the whole trading floor, the trading flow as compared to 10 years ago. So you have to be mindful of these trends. You have to lean into those trends, but at the same time, these things are very simple, having the right value system, right skill set, knowing the market and executing and being there as a long-term player. So thank you very much, Amy, for your time and your attention. Thank you once again, Paklaunch, for another fascinating discussion, and hope to catch you next time on another episode. Thank you and bye-bye.